In this video we are going to be looking at another example of market makers trying to confuse retailers in the daily chart of the euro-dollar. We begin the study by numbering evident market extremes in the chart to identify structures. These structures are the beginning of every analysis, and they will serve as the axis to all tools that come later in the process. From number 1 to number 5, the market seems to be in a normal downward flow. From number 5 onwards, the behavior of price seems to change a little bit. Notice that number 5 does not actually reach a point of supply and demand that would be near the turning point in number 3, and instead it starts to create a vector down in a lower point. Another interesting evidence here is the fact that number 5 failed to reach the center line of the pitchfork. According to the Hagopian's rule, when price fails to reach one line, it tends to go more aggressively in the other direction. When markets are flowing naturally, you will notice that price only reverses in supply and demand zones, but in the case of market makers trying to intervene, this paradigm of reversing in supply and demand zones becomes too predictable. We can find further evidence of large traders making price start the vector in a lower point by looking at how the vector from 5 to 6 progressed to its end. We have the usual organized behavior on the way down, and we also have an organized behavior on the way up when price is creating the vector from number 6 to number 7. The confusing thing about this situation is that number 6 indeed surpassed the low number 4 and closed below, which makes high number 5 a solid structure. However, this mechanical definition of solid structures is in contradiction with the read about large traders. This is one of the reasons why it is important to perceive how price reaches certain places, and not just where it reaches certain obvious extremes. If you were paying attention to this market and intending to go short near number 5 ignoring the subtle layer of interpretation attached to market makers, you would be stopped out. Observe how things start to make sense near number 7. Price reaches the supply and demand zone of high number 3, it reaches the outer line of the fork, and it pokes the high number 5 without closing above. All of this after the manipulative interpretation of how price went down from number 5 to 6, and how it went up from 6 to 7. Retail traders that were looking to go long at the level of high number 5 got washed out of their positions. Large traders sneaked into the market with large positions in number 7 at the expense of the retail traders trying to go long. If you are not aware of this kind of detail, you will find yourself getting stopped out repeatedly in these situations. Notice how price goes down after 7, confirming that large traders did manipulate this market perfectly once again. If you wish to learn more about how large traders act in the market, visit the Fractal Flow website and you will find more information about that and many other aspects and layers of interpretation of price action. If you enjoyed this video, don't forget to click the like button, subscribe to the channel, and leave your comment below. Thank you for watching.